Now I'm going to take you into a whole new world, all right, with the profile. We are accustomed from our candlestick charts to looking at volume in what we describe as a volume histogram. And you see this histogram down here. Each bar tells us the cumulative or the aggregate quantity of volume for the bar above it, and we are looking at a 30-minute chart here. I told you that the profile will work on different time frames, and now I'm taking it to a shorter time frame to show you how the principles work on different time frames. So let's take a look at how we can now put the indicator known as volume at price on a candlestick chart. So now I am doing what is known as integration. I am integrating the profile into my candlestick chart. Now, here's the profile, and each of these bars represents the level of volume that was traded at that price. And on the left-hand side, I have the prices. So I have the prices on the right in the form of the scale, and I also have the prices on the left. That's not all I'm going to have for you on this powerful indicator. Not just volume, profile, and price. I am also going to include for you the actual levels of volume at each of those prices. As you can see, if we, for instance, take a look at the price level of 15/16/50, we can read exactly how many contracts were traded at that price level. And in this case, it was 71,173 at that price. Well, what do I want to hone in on? I want to hone in on the high volume activity. And when I do that, I want to look at my candlestick charts. And now, I told you, I do use candles, and we can now integrate them with the profile. What do these candles tell me? What do these shapes tell me? Okay. Indecision, that's one answer. What else? Thank you, consolidation, very good. Or, in terms of the profile, rotation, stopping price. Do you remember that? We had a big up move, see that? And then we got to the stopping price. We're rotating around that stopping price. As a matter of fact, take a look at the volume levels. I bet you can even identify what that stopping price is. What is our biggest volume level on the volume at price? 15/17, 85/701. Does anybody see anything higher? That's it. There it is. There's your stopping price. Now, I'm even going to give you more valuable information. At each of those levels, I am going to identify for you, using that indicator, what percentage of those contracts was buying and what percentage was selling. So if we take a look at our price here, 15/17, 55.3% of that volume was buying and 44.7% was selling. All right? What does that tell me now that I'm armed with additional data? Am I ready to take a short? 55% to 44.7% on my highest volume bar. Who is still more powerful at that price level? The buyers. Right. Now, what made you say volume is drying? How do we know that this is buying and this is selling volume? Well, the easy answer, of course, because it says at the top of the column. but that's not, I won't settle for that. I'm going to actually explain for you how we arrive at those numbers. In the auction, there are some key rules that everyone should understand in any electronic auction exchange. I summarize them as 12 rules. We've covered some of them today, but anyway, there's a very important rule, and the rule says for any transaction to take place, we have to have both a buyer and a seller. And we can't identify a transaction as saying this is a buy or a sell transaction. It's a transaction because every seller has a buyer and every buyer has a seller. Here's how we do it, though. We take a look at where the transaction took place. Did the transaction get executed at the bid, or did it get executed at the ask? Now, if I have an aggressive buyer, are they willing to buy things at the ask? They're an aggressive buyer. Absolutely. That's the definition of an aggressive buyer. They'll buy it at the ask. And what happens when I have a lot of aggressive buyers in the market? The ask starts to go up. So by definition, if I have a certain price level and more of my transactions are taking place at the ask, it would be a reasonable assumption to say that we have a higher level of buying than we do selling. If, on the other hand, I have a greater level of transactions taking place at the bid than I do at the ask, it would then be reasonable to surmise that the seller is in fact more aggressive and they're willing to meet the buyer on their terms, and that's why they're selling more at the bid than they are at the ask. That's what we have to go by on. We're not market makers, but we hang our hat on whatever we can, and that's a reasonable explanation. Did I explain that well? All right, so that's where we come up with those percentages. And by the way, there is a term for the variation or the difference between the total transactions at the bid and the total transactions at the ask, and that is called the delta. And as a matter of fact, the software that I'm using is called Market Delta because it's based on that whole premise, that it shows you that delta in the market. All right. I want you to take a look at something here with me, and we want to take a look at the cluster of candles that we have. Take a look at this candlestick pattern first. We have a price drop. These are, by the way, 30-minute candles. Then we have somewhat of a doji, if you will allow me to call it that. It isn't quite a perfect doji, but close enough. And then we have a big wick right next to it, and we have a candle that extends higher. Now, you already see what has happened and what has transpired. These two candles come after it, and prices drop again. Even though, if I hadn't seen this, this probably would have looked like a very reasonable long to take. Now, let me show you why the profile saves us from those types of problems. But before we do that, since I have a chart here showing the delta percent, I can add that to my volume at price. So I can show the actual delta. That's the difference between total number at the bid and total number at the ask, and the actual percentage of delta. All right. So now let me show you the little secret back again here that we wanted to observe. And I've added another profile on the charts, and this time it's a delta profile. So immediately when I see a big negative delta like this one here and this one here, this is selling. And sure enough, prices continue to drop. Here I have a big positive delta, this is buying. But let me come back here to the two big negative deltas that we have here, and how this structure really helps us quite a bit. Remember the pattern that I tried to point out to you earlier? And then if we would have bought right after this candle, we would have been stuck in a bad trade. It would have dropped back down to the low. And if we had this is a whole hour lower, many people would have probably taken their losses and gotten out. Now, I don't enter the trade until it clears this big negative delta. So the only time I would begin to buy is, notice in this candle, I don't go by the candlestick pattern, I go by my profile, and I knew that there was a big negative delta here, a big seller here. I don't feel comfortable buying until I clear him. So this is when I would have gone long, and notice how much of a much better decision this would have been buying here versus immediately jumping here and buying at this candle. Does everybody, or can you see the benefit? Okay, and you see why this was a very reasonable and decent candlestick pattern, but it failed. And this is how my profile keeps me out of trouble. It helps me with much better timing. So I waited. This candle takes out this heavy negative delta volume, and I'm above it, and I'm comfortable now. I'm in the trade, and it goes higher. And guess what? I put my stop very tight, right at this big negative delta that I've just cleared, maybe a tick or two below it. All right. Now, to prove to you that this existed before this candle happened, all right, look at how prices continued to drop lower from these negative deltas. We were not able to overcome that negative delta yet because we dropped even further lower. How could we continue to have a negative delta here when in fact we're starting to go up? Now, what's happened is we've exhausted that negative delta with buyers down here that have been able to, and that's why we took it out and we were able to get above it. Remember when I told you there is a level of precision that the profile gives us that we can't get anywhere else? Where else would you be able to get into a trade and be comfortable putting in at the most a 1-point stop in futures? Not very many places. So this is the profile for the day, for the entire day, and I'm looking at it intraday, and each of these candles is a 30-minute candle. Now I also want to show you, again, the randomness of the market. Take a look at this. It comes back, and notice where it comes back to test. Right here, this level where we had a negative delta. Is this seller still here? The seller is nowhere to be found, and so prices shoot up and we continue higher. So these price levels, these key delta figures, we were able to take this one out and we moved higher. Now the market comes back and it wants to test. Is this seller back? Is this seller back here? Is he going to continue the selling? If not, if the seller is no longer present at this price level, then ultimately prices will shoot even higher. The profile with the 30-minute bars is remarkable when you put the volume at price and you monitor what's happening at each of those price levels. And here, because I have a positive delta at my stop, I'm still very positive in terms of sentiment. I don't see any selling. The only time you would begin to see selling is if you saw a lot of negative delta starting to increase, and we're not seeing it at the top. And so this helps you not to take any premature shorts and to realize that even at this top, we are still positive in the rotation. It presents a whole new way of looking at what's happening in the market. I now know at every price level who is dominant at that particular price level, and I can see the selling as it occurs. I can begin to see the shift and moves higher. And I can also see that at the top, things are still positive. I'm adding one more column to also show you another helpful tool on the volume at price. Is everybody familiar with what a tick is? And I don't mean the insect. All right, what's a tick? A single, I'm sorry? A single trade, okay. Well, it is an actual trade in the market. It could be more than one contract, but it's a trade. So every time the market has a transaction, it ticks. There's a tick. All right, what is the significance of that if all of a sudden I have a lot of ticks in the market at one price level? Volume, that's true. Or high frequency. They could be just churning real quick. But it is nevertheless important because it tells me there's activity. So sometimes people will put alarms on tick levels at certain prices. If the tick level goes above 10,000, wake me up. And I want you to quickly take a look here and see approximately how many levels, price levels, where we ticked above 10,000. Should be about 8 or 9, maybe 10. Does that sound reasonable? Okay. The important thing that I want to ask you next is, did you see anything important happen at those levels when the ticks increased? I want you to take a look at the 1507.50 and the 1507.25. Notice the big negative delta. Do you see it there? Now I want you to travel over to the left and take a look at the volume bar corresponding to that. Is it smaller or larger than the volume bar above it when we had a positive tick of 23.25? So even though the delta was smaller on the profile, the volume was more. This is the point when prices started to push higher and we broke out. And this is typical of what you're going to see when prices break out above a resistance level. So you'll see more volume, not necessarily a bigger delta, but certainly more volume with, of course, it has to be a positive delta. That's the volume that came in, overcame this resistance, and allowed us to push higher. Detail, detail, detail. Important stuff, very useful, very helpful. So rather than waiting for confirmations for signals, I would, for instance, just put an alarm. Once we have 10,000 ticks or more, ring the bell for me. I come, take a look at what's happening. Aha, I used to have a negative delta. I now am getting more volume, and I'm getting a positive delta. Breakout city, buy, buy, buy. There's a signal. But you see, part of it is I have to analyze. I have to take a look and see what's going on in the market. The signal is just to wake me up and get me to pay attention to what's going on. All right. We had other increases in volume up here. Why do you think that happened? Those ticks up here. Increased activity again. To continue to push prices higher. It needed an additional push, and somebody was committed, they pushed it higher. All right, and this is approximately the level where it was pushed up here from here is the level where it came back to test. Is there still commitment here or not? And there was. And that's why it took it higher. So if in fact when we had dropped here, I began to see a negative delta increase at this activity level with some volume, I would have been inclined to short. Okay. Numbers, data are very helpful. Information, information, information. I know it takes an effort. I know it's not easy, but it is helpful and it is valuable. And remember, all hard work pays. Nothing worth anything comes easy. All right. Now, in addition to that, we have another column that we can add. I don't want to clutter the entire chart for you, but I want to make you aware of the level of detail and the level of information you get with the profile that you don't get with any other tool. This is the percent of total volume. So I can look at any price level and see how much of the day's volume was transacted at that particular level. And this is especially important at spotting my stop price, because you'll begin to see that as one of the highest percentages for the day of volume, and the cluster around it. And again, that begins to form my value area. That's where the bulk of the volume is starting to take place. This is very important, again, for somebody that is going to scalp and wants real quick tick trade here or there. This is the area where you want to be. A lot of liquidity, a lot of volume. In this case, it happens to be a very narrow, very short span, and usually it is.